Hey, I'm Matt Hudgens, and he's Dave Mulvaney, and this is Profitability MD. Dave, how you doing today, buddy?
Matt, doing fantastic. January 15th. It's a good time of year.
Well, we get a bunch of rain, so I'm already depressed. So I'm getting the winter doldrums, whatever, couple weeks in.
Come spend some time in Florida and that sun.
Sunny Florida. I know it's ridiculous. It's like 75 and sunny all the time. What do you like, San Diego or something? Ridiculous.
It is. It's San Diego without all the liberals. So.
All right. So we're episode 56, and we're going to have several of these kind of talks. But let's just call this one, how to sell your business for the best price. How to sell your business for the best price. You and I do a lot of coaching that helps people increase the value of their business so they can sell it for the best price. Exit planning is another word for it. Built to sell is another word I like to use. And these are all valuable information, even if you're not going to sell your business. You eventually, we're all going to sell our business. It's like, death and taxes, two things that are certain. You are going to leave your business at one point. It's going to be, you're going to die in the chair or you're going to sell it. But there are two options, right? And then, and it's for certain. So it's really funny. We've talked about some of these stats before. It's like 75% of business owners would sell their business today if they can get the best price and they have enough money on the sidelines, right? To be done.
And you know what? What's funny is, so you say, basically you're going to either die or sell your business before you die. And what we could probably put an asterisk there. You could have a major life event that could mean a spouse gets sick, you get sick,
right?
A parent, all these various things. And so sickness we could associate with death. Because if you have a stroke and you run your business and, all of a sudden no one else can do your job, you're going to be sold at a fire sale. So
yeah, and we see this all the time in the dentist industry where you'll have a dentist pass away and the wife is left to sell the practice. And there's a huge difference in the value of that dental practice if the dentist was prepared to sell it. So again, I call it built to sell. Mm-hmm. And especially, and we suggest this to all the business owners, is have, how do I say it? It's not a valuation, but have things organized every year. You know how you get ready for your taxes? That's a great time to get ready for, here's kind of not the value of my business, but the organization of my business and where it is today. So we see, this just happened last month in December where a dentist passed away. The guy was not prepared. So the wife had to sell it for basically 50% of the value, right?
And it was probably 50% of the assets, right? I mean, would be
yeah, the dentists sell for 67% of revenue. It's kind of a revenue multiple number. And because of that, she only sold for about 35% of the revenue because we don't know if they're going to stick around because there was no contingency plan. Versus when we see a dentist who's got his stuff organized, even if he passes away, we've got all the materials, we're ready to go. You can sell that for the maximum price because it's all organized and ready to go.
So let's pause and talk about that. Because that's what we're talking about, how to sell a business for the best price. And so, you're a dentist and I'm going to give you a quick example that's not a dentist, but is veterinarians. So sure. My cousin here in Jacksonville, my cousin Russ, he just bought a series of veterinarian clinics.
Okay.
And all the veterinarians are looking at him going, wait, you're not a veterinarian. He's like, that's the point. Okay. So I can hire veterinarians. And I'm using that as an example. If you're a dentist, and you're looking at it as, okay, I work on people's teeth. Teeth. Your product is helping people fix their teeth, cleanings and things like that. Your product is, and you've got to look at it from a business standpoint, much like attorneys. What do attorneys do? They say, I need more attorneys in my office so that I can maximize my hours, if you will, because I can only work so many hours. So to maximize the value of my business, I need more attorneys. And so if you're a dentist, you might think of it the same way. In order for me to grow as a business, not as a dentist, you gotta separate the two. To grow as a business, I need to consider how I could bring on another dentist, or how another dentist could step into my shoes without all my customers leaving because they're so married to me.
Right. Exactly. My joke is you need to have your business so well organized that an idiot like me can take over and step in and run it. That's how you got to view it, that there's got to be somebody that can step into your place and take over seamlessly.
And I wasn't nodding my head at the idiot like you part. I was nodding, agreeing with you that someone should be able to step in. So.
Right. Right. And that goes back into, you and I was talking about this. Business is a system. Business as a system, a process that can be learned. And you talk about your cousin that's the veterinarian. And we've talked about this before. The three key elements of any business are going to be what I call attract. You got to get new clients. So you got to get new leads and you got to convert. You got to have deliver the value of your veterinarian. You got to service. If you're a dentist, you got to service. You're an HVAC contractor, you got to service. You're a remodel, you got to service. And then what I call, in order to scale and get referrals from existing clients, from past clients, I call that scale and service, maintain contact, right? Those are the three elements of a successful business, no matter if you're a dentist or a veterinarian or an HVAC contractor. What most people think of is just that middle section, delivering the service. I'm an HVAC guy. I'm a veterinarian. The value of your business, here's the other thing people always say. People always think that someone's going to come along and offer me $10 million to buy my business. Okay. And that's not how it works. There's no magic number. They are going to pay you today what your business will generate in cash flow tomorrow. In other words, there's not just somebody who says, hey, Dave, I'm going to give you 10 million bucks. What somebody is doing is saying, I'm going to pay you, Dave, today 3 to 5 times whatever your business is producing in cash flow, right? That's a typical private equity deal, private deals, 3 to 5 times cash flow.
That's if you're in the $5 to $25 million range.
No, that's mostly for, most businesses. Other businesses are exceptions, right? So we talked about dentists sell at 67% of revenue. You can back into that. That's only about a 1.5, 2 times. CPA firms sell at 1.1 times revenue, which backs into being about, actually not a very bad number, 30, that's 3 times cash flow pretty much, because they're about 35% profit margins. But in general, if you just said most businesses are 3 to 5 times cash flow. And what that means is I want to be able to pay myself back in 3 years. Hey, Dave, I'm going to pay you $1 million. Well, in order to do that, your business needs to be producing $200,000. So that'd be 5 years I could pay you back. And now I'm free and clear. Or that's a 20% return, by the way. Or they'll say private equity wants 33%, which is 3 years. So I'll pay you $1 million, but your business better be generating $333,000
in profit. Right? It's important to say in profit.
Exactly right. And cash flow that I can use to pay you back. So there's no magic 10. Even if your business is worth $10 million, they're not producing $10 million. They're going to use that $10 million from the cash flow your business is generating.
And let's pause on that thought process for a minute. And so you might be thinking, I'm the owner. Let's say you're the owner and making $150,000 a year. And you think, well, we're making 300, we'll use 350,000 for the number. We're making 350,000 a year. So technically we're making 350 plus my 150, that should be 500. My business should be worth 1.5. And that's not the case. If somebody's buying your business, they're looking at your salary and they're saying, I want to put someone in those shoes. That's the difference between somebody who works for a business and somebody who buys a business. The person who buys it, unless it's a sole proprietor, like they're a dentist like you, they want to buy the business and say, who can I put in that spot and make them do that work? Not make them, and pay them to do the work so I can get my money back in 3 years.
Well, and here's a great analogy talked about would be, so not only it's pretty much what the owner makes, both his salary and his profit share, but like you said, if I had to replace him, so we've had this before, like a Subway franchise, just to use Subway as an example. If I want to own or operate that franchise and work in the Subway, I'm going to work 40 hours a week in the Subway, I can make $100,000, $125,000, $135,000, right? But if I'm an investor and I want to buy a Subway, I'm going to have to pay a manager to be in there somewhere $50,000 to $70,000, right? So I'm really only going to make, the rule of thumb is you're making $50,000 per store.
Yeah.
So I'm going to own 3 Subways. I'm going to make 50,000 per store, but I got a manager in every store, right? So that's how you have to. So then that value of that business is only 3 to 5 times that 50,000 that I'm making as the owner, non-operator, right?
Yeah.
Because I had to put somebody in that place, right? So if you want, we have this all the time in financial services. So in financial services, what happens? It's the same kind of numbers: 3 to 5 times cash flow. There's a revenue number, 2 to 2.5 times revenue. Multiple expands the bigger you are. $1 billion shop sales at 9 times cash flow. 500 million or above or below sells at 3 to 5. Anyway, my point being is, if I want to stay on and work for the business as a consultant for 3 years, they're not paying you on that cash flow.
No.
Right? They're only paying you on the cash flow that doesn't include your salary. Right? So let's say that example, you're making $300,000. You think you're going to sell it for $1 million, 3 times the cash flow, right? But if you decide you want to work and be a consultant for $100,000 a year, they're no longer paying you $1 million. They're only going to pay you 3 times that $200,000 because you're keeping Dave $100,000 in salary in that.
Now here's where you can really maximize, because that's what we're talking about, how to sell your business price. So let's say you're 20 years from retirement right now. So let's just say you're 35 years old and you want to retire when you're 55. Well, my recommendation would be somewhere in the next 5 years, acquire a building or real estate asset for your business, because you can do a 15-year mortgage, and then 15 years from now, which you, again, acquire in the next 15 years, and then you're going to have it paid off by the time it's time to sell. Well, let's say that asset now is worth $1 million, and then you got to 300, and you might have paid 400,000 for it 15 years ago. So now you're putting yourself in that $2 million range instead of $1 million. Instead of just paying a rent for 15 or 20 years, you now acquired an asset that doesn't have to be sold with the business. As you know, many people will keep that asset and then lease it to the new owner. That's another option.
Well, it's funny you say that. So I totally agree with that. If you can buy the building, that's one of our 4 pillars we talked about before. 4 pillars of building wealth. We actually had an example of that, a barbecue shop here in Atlanta, and had 4 locations. The real estate was worth more than the barbecue business. And this was everybody knew this barbecue place. But even after all that, the value of the business was only so much. The real estate was worth more than the business itself. And because of that, he actually held on to 2 of the pieces of property, sold 2, and used the cash flow from the other 2 to basically pay his living expenses. Then he sold the property another 3 or 4 years later.
Well, remember, McDonald's was a broke corporation until they decided that they were in the real estate business, that they weren't in the food business.
Yeah, wait. All right, we're getting distracted.
Okay,
so go back to maximizing the value of your business, how to sell your business for the best price. And you got to think of it. The long way to say that is, you got to, how much would you pay for the business if you had to buy it, right? And the idea is you need systems and processes in place so that you can be replaceable.
So let's talk about systems and processes for a minute, because ultimately that is what they're buying. That is what your business is. You take a widget, I don't care if it's teeth or air conditioning or whatever. You take this product or service and you turn it into cash. That's your business. The way in which you do that, if there's a itemized process, we do this first, we do this next, we do this, and every person that you hire can plug into that process, the value of your business goes up exponentially, the better and clearer those processes are. Because if you die and your wife can walk in tomorrow and go, oh, this is what Matt did every day. It's all spelled out. So all I have to do is get someone who can follow this roadmap. And if you're lucky, maybe sometimes those people are already inside the company. That does happen. Right. Because you don't want to sell at the fire sale. Many times, exactly. It's so sad that so many spouses are faced with this fire sale of, all right, my husband died, and all of these people, the 25 employees, they're all in limbo because they don't know if the business is going to survive now. You don't want that when you die.
No. But when you go back to, it's really a lot of common sense, almost like a checklist, right? So would you want to buy a company that was growing, stagnant, or shrinking, right? I kind of view it as a plus, a flat line, or a minus. So if I'm looking at your business and if it's growing, you'd get a plus, right? If it's shrinking, you get a minus sign. If it's stagnant, you get kind of just a flat piece, right? Then I'd look at, okay, what are your profit margins? What are they as percentage wise? Are you 35%, 40%, 50%? What are your profit margins? So how does that compare to the industry? How does that compare to your past? Is your profit margin increasing or decreasing, right? If I was looking back at your sales, so that matters to me, right? Is your profit margin industry average, below average, above average? You get a plus sign or a minus sign on that. Is it growing or shrinking from where it was before, right? Because profit margins, competition, oh my gosh, it's just the beginning of the end because your profits are shrinking, right? But these are also common things. You would know this as a business owner. You'd be like, gosh, I'm working twice as hard to make half as much money, right? You know that. You know that as a business owner. Would you buy that business, right? Concentration of revenue. So, 80% of revenue is in one big client. Is that more valuable or less valuable? That's
extremely less valuable if it's all one client.
It's all one client and you lose that client, the business goes to nothing.
If your business isn't unique, there's nothing, there's a lot of competition in your business, and you're not that differentiated from your competition, which is going to show up in your profit margin. That's why almost all businesses are acquired based upon profits, because they know if you're in an exclusive niche and you're running a 75% profit on sales, well, their ears are going to perk up and go, wow, what do they do? And if it's a big marketplace, that's where earnings can really give you the best price, because the higher your profit margin is, basically the higher the value to investors.
Right. So some other things to checkpoint, we talk about predictability, right? So are you just selling a widget, or is this a recurring revenue model? What is more valuable? A recurring revenue model is more valuable, right? So if you're a landscape company and 80% of your business is recurring revenue, like I'm doing the weekly for this apartment complex or weekly for these residential, that's much more value than I'm a landscaper who does the landscaping at an initial install of a neighborhood, right? That's a transaction and I'm done, as opposed to recurring revenue of weekly clientele, right?
So I think of two organizations right now. See, because and I know you deal with this, Matt, because you're in the financial services world. You'll have people who say, yeah, but I'm the business. And I'm going to use two examples of people who actually their name was on the company. Okay, Zig Ziglar and Dan Kennedy. Sorry, Zig Ziglar and Dan Kennedy. Both of them, their name is on the company. Both of their companies are still running. Zig has been dead. Dan is in hospice, from what I understand. Both of those companies are still running. Why? Because of what we're talking about right here, setting up these systems before they're needed, and it doesn't matter whose name is on the business. My next door neighbor is a 60-year-old company, but he bought it about 20 years ago with the woman's name on the business.
Right.
So you can sell a business even if it's Matthew Hutchins LLC, can be sold to someone else, provided the systems and processes are there. And but here's the one thing about how to sell your business for the best price is not having to sell your business. If you have all this in place, guess what? And you're receiving income because you have other people running it, you don't always have to sell. That's probably how to sell your business for the best price, is when you don't need to sell it, right?
That is exactly right. I always talk about build it to sell, even if you don't plan on selling it, right? Because a lot of the things that we coach are going to be build it to sell it, so we could get the maximum value if we wanted to. But if I'm only doing my A+ activities, why would I want to sell it? An example I can use would be one of my bosses that I worked for, where he took off. He only worked Tuesday, Wednesday, Thursday. He went to the mountains, Friday through Monday, because me and the rest of the staff were running the business for him. And he came in and worked Tuesday, Wednesday, Thursday, and everything else was handled the rest of the week. So he had built it to sell it, and then he didn't want to sell it because he was enjoying the fruits of his labor. Good for him. right?
Yeah.
That's the ideal of how you would like to build your business. If you're only doing the stuff you want to do, feels like fun, right? Doesn't feel like work, right? And then you have the systems and processes in place. Growth is a big deal. So are the new clients coming from you? Are you the guy closing all the deals? Or is there a sales funnel, a sales process, a sales system where we call that institutionalized sale versus individualized sale, right?
One of my bullet points is to get the best price, you have to have a system that attracts new clients and then nurtures existing clients. And that's part of a system again. And here's the thing I want to say, in this episode is that simply, if you're listening or watching this, don't get overwhelmed if you are very far from this. I mean, you can actually put this together in a series of months, and it doesn't have to take you 20 hours a week. But it does take a time commitment. It does take an active focus on making it happen. But, you do it one step at a time. Okay, what happens in operations? My wife and I just went through this in one of our businesses. What happens when that product comes in the warehouse? I want to document everything coming in and out. So we've been carrying our smartphones, and that's how we're doing our processes, documenting them to have them turned into text so we can create a booklet that here you go.
Yeah. But that's a great point. Go back to what I said when we started this. Is there 3 parts to any business? There's attracting new business, right? That's in and of itself. There's the delivering of the service or product that you deliver. And there's what I call the scaling and servicing. So instead of being overwhelmed, pick one of those areas. So you're talking about the during unit, as Dean Jackson would call it, the delivery of the wow experience. You're saying, what happens when a product comes in here and how is it handled? I'm working on that with a dentist firm right now. What happens when somebody calls in to set an appointment? Literally to what happens when they walk into your office, they go back to the chair, they sit in the chair, they have the procedure done, they walk to the front desk to pay, and then are we setting the appointment before they walk out the door again? I mean, literally that's the steps of somebody walking into it. It's before they even walk in because it's the phone call, right? That's the processes of, we don't have to do them all today, right? You might just document, what we documented last week was, what does a proper room setup look like? Right? And what we did was a 1-pager. Here's all the tools that the dentist likes to have on the tray. And he took a picture of it. This is what I want it to look like. How simple is that? It's a 1-pager, and now it's in a little folder right inside the door. So even when he has a substitute hygienist or an assistant, here's the checklist that says, here are the tools the dentist likes to have on the tray. And on the back side is literally a color photo of, here's what the tray setup looks like.
You can't get any easier than that. That's the easy button. And, there is a reason that, like when you call Comcast or AT&T, there's a reason that people are answering the phone in another country. Because they have every possible question that every client has ever asked. Well, maybe not everyone.
Right.
They have 99% of them. And when you ask that question, they're typing. They're looking for the answer. The people answering the phone don't know the answer. They just know that they can spit something out once you ask the question. Why? Because the system is so clear that it's in the computer. They go, oh, what happens when you don't have cable at your house? The first thing they ask you, is your TV plugged in? Yeah, I haven't unplugged it in 6 years. Okay?
That's exactly right.
I mean,
but got to ask it. It's part of the checklist.
It's the checklist. And so that checklist is a I guess you'd say it's the way that the one-man operation, the one-person operation, as they grew, they itemized all of these things, and they said, okay, now I can start plugging people in. And eventually, I'm not saying you're going to outsource to India, but those are always options if your systems are clear enough. Putting a picture on the back of the door for somebody to set up a dental office, that's brilliant. You could do that if you're a veterinarian. You could do that if you're you broke up. You broke up, Matt.
Oh, okay. Here we go.
Yep.
I was saying, there we go. Same thing. Are we back yet?
Yep.
Yeah, same thing for the vet, right? So you're talking about your cousin bought the vet. This is what he should do to all his vets is, here's what the wow experience look like. When they call to set up an appointment for any of those offices, what is that? Here's the script we're going to use. When they walk into the veterinarian's office, what does that look like? When they walk back, what does that look like? When they check out, he can systemize that wow experience and do it for all 4 veterinarian offices. He could do the, what does a veterinarian's office setup look like? I'm sorry, the patient room setup look like, and do the exact same thing. Here's his checklist in the picture. And now he's got it in all 4 stores, right? All 4, right? That's one of the systems, right? So you don't have to be overwhelmed for it. I like to put it in the big 3, right? Attract, deliver, and scale and service. Boom. If we want to work on the wow experience, that's delivering it. And what does that look like from soup to nuts? And the scenario I love to use, I've been using a lot lately, is Jiffy Lube or Lexus. So when I go to get my oil changed at my Lexus, it's really nice. They greet me by name. They got water and coffee and sodas and Wi-Fi and a place to sit down, whether it be quiet or watch TV. I go to Jiffy Lube for my daughter's car, and it's, TV. I can't find the remote. It's on some screaming TV show. The seats are sticky. They got a Coke machine that doesn't work. It's just yuck, right? Do you want your business to be the Jiffy Lube or the Lexus?
And the opinions of Matt Hutchins in regard to Jiffy Lube, it's not the opinions of Profitability MD.
No, I don't mean picking. You could be the best Jiffy Lube too, so there's an opportunity to have the wow experience of Jiffy Lube.
That's the point. Those are franchises. And to say something like that, it's an indictment on the owner of that franchise, because the reality is the owner of that franchise should walk into his lobby and say,
yes,
what's going on?
What is the experience
Why
of
is
the
the lobby not on the checklist? Yes. I guarantee you everything out in where they change the oil and all that stuff is itemized perfectly.
Yes.
They keep a certain amount of fan belts. They keep a certain amount of oil. They keep a certain amount of oil filters. All that stuff is excessively organized. But it's not on the checklist? Apparently the lobby. Apparently
not the one I went to, but correct. That'd be an easy wow experience. I wanted to say a couple of other things. Clean books. You got to start cleaning up your books.
Yeah.
And what I mean by that is, you need to use something, QuickBooks or some other accounting software. QuickBooks is really easy. Everybody knows and understands that. May or may not need to be audited or reviewed. Typically, when you do sell a business, they'll want audited results or at least reviewed results for 3 years. The average business owner takes $50,000 to $100,000 of benefits. Where I got my cell phone, but that's going through the business, or you might have your car going through the business. That's easy to subcategorize in the books. In other words, your books can be really clean. Then it could be saying, owner's expenses, right? Owner's expenses of the car, owner's expenses of continuing education, right? Because if you make it easy for me, I can back that out and say, yeah, well, the new guy isn't going to have a car, and the new guy isn't going to be doing all this $10,000 of continuing education. So you got to start cleaning up the books, because what they're going to ask for you is your tax return, by the way. And of course, we're always trying to minimize our taxes, right?
Of course.
So you're going to need to show the tax return.
And you should minimize your tax.
And you should. And then you're going to need to show your books, your QuickBooks, P&L, and they better match. And if they don't match, you better be easy to explain. And it's easy if you have kind of owner's benefits, let's call it. Does that make sense? My point is, you got to start cleaning your books up.
I believe everybody, of course, I run accounting software. We use a software called Connected Accounting. It's by a company, AccountTech, just because it interfaces with Mac and PC really easy. But the point behind it is, that's the documents I turn over to my CPA, and then they take it from there. And if you're not, I have a rent-to-own business. So I buy real estate and I put it in a rent-to-own market. One of the biggest reasons that people can't qualify for a mortgage when they're self-employed is because they don't run their books. Yes, they don't run a legit business.
Verify the income.
Yeah, if you run your business legitimate, what is it, $50 to have an online service? $50 a month to have QuickBooks Online?
I think it's like 10 or 15. Yeah.
I don't even know what it is, but whatever it is, if it's $1,000 a year, it's $1,000 a year that's going to increase the value of your business.
Not only that, I actually believe having clean books actually helps you pay less in taxes. Right? Because you actually know where the money's going, and you can allocate it appropriately, and you can expense it appropriately. What I actually see is more business owners don't expense things that they could expense. They're like, oh, I didn't know I did that, or I thought I was doing that, right? I actually see the opposite, which is they weren't expensing legitimate business expenses because their books weren't clean and they didn't know.
Yep.
Right? They didn't even know. Oh, I thought I was putting that on my business credit card. I guess I was putting it on my personal. Anyway, I know we kind of ran a little long, but this is great. This is more than one podcast, right? So we talk about how to sell your business for the best price. You're going to have to build it to sell it. You're going to have systems and processes in place. You're going to have to build it so any idiot like me or Dave can come in there and take it over, right? And in order to do that, you need checklists, processes, protocols, whatever you want to call them, right? But it's also some common sense stuff, right? Are we growing or shrinking? People want to buy a growing business, not a shrinking business. Am I concentrated on one client or not? Are all the new business coming from me? Is all the new business coming from one source, right? So yeah. These are kind of I call them common sense. They're common sense to me and you because we do this all the time, but they're also common sense if you think about it. If you were looking to buy your business, would you buy your lawn care service today, right? And because nobody's going to magically do it. So you want to make it as pretty and as clean. So everybody and their mother wants to buy your
I know of a landscaping company here in Jacksonville right now that's up for sale, and they're up for sale for like $10.6 million. They do like they do like $25 million in gross sales every year. That's a landscaping business.
That's a legitimate business, right?
You know, what's the difference between them and the two guys who are cutting lawns? They treated their business like a business. They created systems and processes. They had scalability. They deliver great service, undoubtedly. They attract new clients constantly. I mean, they're doing all the things that made them a business versus a service. That's the difference.
I totally agree. All right, man. Where can we find you?
Matt, you can find me at davidmulvaney.com. You can connect with me on LinkedIn at David Mulvaney, and you can find us at profitabilitymd.com. That's where you can find all of our podcasts, and we do this every week.
Perfect. All right. I'm over at LinkedIn, Matt Hudgens at LinkedIn, and then 10xprofitblueprint.com is my coaching website.
Good. And if you need help, if you don't get stressed out over this, 88% of businesses don't have this in place, but that's why Matt and I are here to help you put these things in place so you can get the best price when you go to sell your business. Matt, great show. Talk soon. Take care.